Welcome to TheoTrade. This is Don Kaufman. It's December 12th, 2018, and you are watching the TheoTrade evening video. Well, soft rally today with yet again an expansive and wild range. Well, what do I actually consider a fairly wild range? Well, take a look at the high to low inside of the S&P futures. I mean, we're throwing off 50, 60, 70, 100-point moves in the last couple of trading sessions. And if this doesn't do it justice for you, just the high to low, you really have to look at, well, just this trading week alone. This kicked it off right here on Sunday evening. Now, this happens to be a 1-hour chart, just zoomed into Sunday evening. Sunday evening, okay, we also started on a specific gravity point. And for those of you, if you haven't tuned in to any TheoTrade videos, well, you got to get in tune with these gravity points because, well, they are in play. This happens to be 26.26. We kicked off at the 26.26. Okay, rallied mildly above it, came down, almost tagged into the 25.75. I mean, come on. That's our gravity point. We're just, okay, points away. Ripped back to the 26.26, took back off to the upside, just missed the 26.82, came back down, touched 26.26, ripped again today. We're back to 26.82 and we're fading back off of it. And I can't stress to this enough, all right? This marketplace, again, is throwing off some wild ranges, which is, it's opening the door to doing trades that, well, for the most part, we've done before. Now, with that, okay, in just a moment, I'm going to show you a couple of trades that I've rarely done. What do you mean? Well, I've already done these trades. I've done trades at McDonald's. I've done trades at United Healthcare, but why not just go back to the well and do the exact same trades that were profitable a little over a week ago? In fact, I'll even show you a couple of the trades from the previous weeks. Before I get there, I think it's notable, again, to see on an intraday basis what I've termed kind of a soft rally here. The S&Ps are up to 18 right now, but I'm telling you, with just minutes to go to the cash close, this is not a happy marketplace. Once again, we've tried to substantiate a rally. We clipped right into that 26.82. We've been fading off of it. And I want to get really specific here. The financials, and I know Corey Rosenblum mentioned this last night. The financials, once again, okay, they're getting served up on a platter over here. They're only up 16 cents. I looked a little earlier in the trading sessions. These things were at 25. That, people, is a fade on the trading session. You're now seeing financials fading off into the sunset here. Why is that unusual? Because the bonds are also selling off, okay? Right now, it's all about those financials and not even technology. If you look at our kind of our conglomerate symbol here, which is the monsters of tech, not even technology can hold the S&Ps really together. Again, an 18-point rally with the kinds of ranges that we've seen in the last few days means very, very little. And we do, again, look like not only we're at the bottom of this, we'll call it the volatility box, as many of us have kind of dubbed it. It's the hurt locker. Not only are we at the bottom of it, we look ready to expose, okay, what's on the other side. And then we should see some fairly wild movement in terms of volatility. Now, in the meantime, maybe we get a little bit more, okay, of this kind of wild range trade on a day-to-day basis, okay? If that's going to be the case, as I said, I'm going to continually go back to what I call the well. These are trades that I'll do continuously. I'll start with, for example, United Healthcare. What have I done inside of United Healthcare? Well, I've been looking for and taking upon bearish positions in healthcare. Just so everybody's aware, healthcare still is one of the best performing sectors in the entire S&P. Okay, I am looking to take both a long-term and some short-term short positions in here. Now, for those of you that kind of missed it, I'll cruise over here, go down to an account statement. This is just some recent trades that I've actually done inside of United Healthcare. And again, I'll kind of elaborate upon these for just a second. All three of these happen to be identical trades. I have tendency to go out there and trade like 1 lot, 2 lot, 5 lot, and then close things as a package. But in effect, these are spreads that we went out there and purchased them for right around $1.10. We were capable of closing this, okay, for about $1.68 credit. We had a degree of profitability. It wasn't exactly knocking it out of the park, but in this particular trade, we started to run maybe a little bit short on time, but we still, nevertheless, we hit our profitability point. We're trying to make about 55% on these in-out spreads. Well, when all else fails, why not go out and do the exact same thing? Now, United Healthcare is still up 1.5%. Would I actually execute into the trade right now? No. I mean, just listen very carefully, because when I'm doing these evening videos, markets are insanely volatile on a day-to-day basis. And what I'm trying to do is not necessarily give you a trade for right this moment, okay? But to position you, if United Healthcare is to rally back up to any degree, then and only then would we step in and short the trade. Listen, this isn't much of a pop back to the upside. In fact, if anything, this pop has now faded a little bit today. But I want to prepare you for the idea that once again, we can place, okay, this bearish in-out spread. And again, on any good sized bounce inside of United Healthcare, give yourself a little duration, 23, 30 days out. It's fine, okay? What kind of a spread? Again, go one strike in the money, one strike out of the money. Now, as I mentioned a moment ago, I am not about to execute into this trade. All I'm doing is trying to set up the logic for it so that you can then allocate and execute your own trade based on wherever the underlying opens. As I said, at 271, it doesn't sound that appetizing, but this is what the structure of the trade is going to look like. So maybe let this underlying rally up to maybe 274-ish, maybe even 275, and then wrap an in-out spread around it at that level. Now, you'll notice that this happens to be a bearish trade. It is a bearish trade, not only because I want to get short healthcare. Okay, I'm clearly looking at healthcare and thinking, hey, maybe it has a little bit more bounce to the upside left in it. How come I'm not getting bullish? Because the skew is very, very difficult, okay, to build a bullish trade. So the skew at present is still, okay, impacting. Again, we'd be buying a higher implied volatility and selling a lower implied volatility on the calls. So rather than use the bullish trade, the bearish trade, okay, is just simply, well, more effective. It's paying us better because the skew is favorable of buying a cheaper volatility and selling our higher volatility, which is, again, skewing the marketplace in my favor. If you don't like United Healthcare, why not go look over at McDonald's again? Now, I say again, why? Because if you guys will remember, I just brought up a couple of McDonald's trades, well, in the last couple of trading sessions. So here are some McDonald's trades that I happened to open up back in November 9th, okay? Put them on for about a 244, 230 debit in that neighborhood, obviously a scattered number of prices, closed it for decent profitability in those trades. Then I turned around, I actually opened a bearish trade, this is yesterday, and closed that bearish trade today for over 35% profitability. So what do I wait for again? I'll just do the exact same thing. If McDonald's has any upward momentum whatsoever, once again, I'm going to step in here and I'm going to use that bearish in-out spread. I'll reiterate, McDonald's in the exact same circumstance over here. If I'm going to trade McDonald's, I might use anywhere from the 23, maybe 30 day. I prefer not to use the 37 day because, well, there's $5 strike increments and I don't want to lay that much capital at risk. So the 30 day or even 23 day would be ideal. Once again, using the bearish trade is going to put the skew in my favor. With that, and moments to go into the trading day, there you go. As I said and kicked off this video with, it's a very, very soft rally. We can't substantiate anything right now. And even though I recognize in the volatility on a day-to-day basis, you can't predict anything. But I'm telling you, this volatility box looks like it's ready to crack apart. Lots to think about in this evening's video. Have a wonderful evening. Bye-bye.